Are you bullish on Bitcoin? Because if you are, we might need to change your opinion on the cryptocurrency market. So my name is Jonathan. I am a financial forecaster. I've been forecasting for well over a decade now, and I use the methods as taught by W.D. Gann to forecast financial markets. So I take the financial market data set and I create models around them, and I am able to use them to build forecasts for the year ahead. Look, if we're looking to forecast cryptocurrency markets or any market at all, we need to be understanding the rules. The rules of the game, I believe, have changed, and I could be wrong about this, but early signs are starting to suggest that this cycle is heading down and not up in 2025. Now, let me go over briefly for you why I was bullish in 2025 and not bearish, and why I was bearish in 2024 and not bullish. Well, actually, I've been over this before in 2024. We were relatively correct. 2024, the curve was almost 100% accurate. However, it wasn't until around late last year that the curve had actually shot off. I believe it was around the November period that our curve, so 2 months of forecasting, had actually invalidated our whole curve. But before that, our curve was pretty spot on for the year. Well, we take our curves and we predict them out into the future ahead. This is what forecasting is, and we use the mass pressure techniques as taught by W.D. Gann. Now, I have one issue here. Now, before I walk you through these mass pressure charts, I want to show you a few other things, okay? So I'm just going to go back and find the page that I'm trying to find. This one here, for example. So what we have here is we have top to top to top, okay? And we have bottom to bottom to bottom, etc. And I want to say that there is one thing that's not going to happen, and that is a left translated top. I hear a lot of people talk about a left translated top. Now let me explain what a left translated top is. So I'm going to do that by opening up Paint, and I'm just going to draw something out. So in left translated top, what we have is we basically have a start and a finish, and in that we have a midpoint. A left translated top means that the market is running higher, and it actually tops out on the left-hand side before falling into its low point, okay? So we always take a cycle low to low. So if the market was bottoming here, it moves higher, has a left translated top, which means the top is on the left-hand side of this midpoint. Does that make sense? And then it falls, it can go up and down, but it makes its, well, I did that too high, so let's go ahead and make some reversal on that one. It actually makes its ultimate high prior to the top before it, okay? So that means that the low comes in right on time, the low where the market began right on time, but the top occurred on the left-hand side. Again, we can reverse this. Let me just get my pen back on. We can reverse this. We have our start and an end. We have our midpoint, and then we have a right translated top. This is a right translated top. As you can see, the top is on the right-hand side of that midpoint. Let's move this down now and take a look at the current cycle that is playing out on Bitcoin. Let's say, for example, we went from the top in 2013 to the top in 2017 to the top in 2022, and we're going to the top in 2026. And then we want to do is we want to count low to low. So if we count low to low, let's say, for example, let's just use the 2014 low, or we could use the December low, whichever one, the February or December. I think cyclical low probably would have been December timeframe. However, panic low was in February. If we go low to low and we put a midpoint between that low, can you sort of see? I don't know if I can get a pencil on this that'll work. Yeah, I can. Perfect. Low to low. We have our midpoint here. And as you can see, the market moved up before moving down into its next low after this midpoint, okay? If we do that for the next one, we can see we have 2020 here. We have 2018 here. So this is after the top, market bottomed out. We have low to low. And then we have our midpoint, rough midpoint. And we can see that the market moved up, made a right translation top, and came down. Okay, now we take this low and we move it out to the next possible low, depending on where that low is. On average, I believe low to low was roughly 1.5 years to 2 years, low to low. That was just a rough guide we were looking at. 1.5 years or 2 years or so. So we moved from here, 2024, out to possibly 2026 timeframe. And that would mean that we need to find a midpoint. So if we're finding a midpoint between here, we would probably have it around here. I think that we are already past that midpoint, okay? Which means that we're going to have a right translated top and not a left translated top. Now, a left translated top generally tells us that the market finishes lower than where it began. I've done hundreds of videos on this topic in the past. And a right translation top would generally signal that it finishes higher than where it began. That's all it is. It's a left translated top and that's a right translated top. It doesn't dictate cycle variance or where the cycle starts and ends. It just gives us an idea on if the market's pointing higher or lower, and if it ends or doesn't end higher or lower than where it began. So that's basically, if I was to summarize that. So that is just the left translation top. That's one theory, okay? That's not the be-all, end-all. That is one theory of this, and this is how you use it. So are we getting a left translated top? Well, it all depends on where the next low is, divided in half, and then track if the market is above or below that right now. If it's had a higher high than that, and then that midpoint, then it is not a left translated top. If it has had a higher high, sorry, if it's had the highest high on the left-hand side of that midpoint, then it is likely to be a left translated top. But the market cannot break the old high. Let's progress, because there is one more thing that I want to show you. And it is this. This is the Bitcoin halving cycle. Now, I have not updated this to produce a halving effect from the most recent halving that occurred. However, this is the halving cycle from 2018, okay? Now, what we can see here, if we were to track the same halving cycle, we get very similar patterns. So we can see that the markets run up, made its sort of double top around here, or topping pattern before falling lower. Then the markets run up. And we can also see now that we have basically this top and this top, which are these two tops, coming out into the future. So you can see where these occurred in the future. And then we have old tops coming into the future here too. And what we'll notice is that they're all making a top right now. So in this period right here, they're all topping out. And this is all topping out between January to April. And then they're all trending down from there. We may get another burst higher into December to January of 2026. So 2025 December to January 2026 before another top possibly occurred, but that's only if that cycle plays out. This is just one element, okay, and it's just one way to look at it. I'm not saying this is the be-all, end-all. This is just something else to consider, that there is possibility that things are starting to top out now. Okay, not saying that the market's definitely topped out. I just need to put all the pieces of the puzzle together. So that took us back to where we all began, okay? And that is our mass pressure chart. It's in here somewhere. I'm progressing to it. Here it is. So let me tell you why I was bullish 2025. And that was because we are ending the 18.6 year cycle at the end of 2025, beginning of 2026 timeframe. That is when the cycle ends. Okay, I don't care what you think or say. It's just a cycle. It has an ending point and it has a starting point, and that's when it ends and starts. So we're at the end of it right now. So usually the cycle has a very familiar pattern, okay? And it goes like this. This here is the midpoint. This here is the blow off top. And this here is the crash. The crash can be minor. It can be sharp. It doesn't really matter how this occurs. It only matters when it occurs. But this here was 2020. This here is around 2025 to 2026, okay? We're at the end of the cycle now. Usually what happens is all the asset classes tend to rally higher, which is stocks, property, cryptocurrency, etc. They all rally higher into this ultimate peak. And then once it goes pop, everything comes crashing down. I don't care if you think that it's a safe haven or some sort of hedge against governments, corrupt governments, or the end of the world's coming, etc. Most things, cyclically speaking, will come down in that 18.6 year cycle, except for things that are going against this cycle, which might be some sort of commodity at the time, whether it's gold, silver, or anything else. If they are syncing up to this cycle, which cryptocurrency is, they will come down. Gold is expected to top around 2029 timeframe, okay? 2028 to 2029. So I would be primarily bullish into this timeframe for commodities like gold. However, cryptocurrency, based on its 4-year cycle, it actually timed up perfectly well to have a top around 2025, 2026 timeframe, which is also a 18.6-year top, which is also the stock market top and also the real estate market top. Like, I've gone over this many times. Now I know that you really want to be spending all your money on real estate, but you're buying a top. Okay, anyone who's taking out loans right now to buy land, anyone who bought the floodplains, anyone who is trying to invest heavily into anything and they're taking mortgages out, they're going to get screwed over in about 18 months time. Okay, they're going to get heavily screwed over. Now, I don't care, I've gone through this before and I want to reiterate because I like to go off topic oftentimes. I don't care if you can service the mortgage now. Okay, that's not my problem. What I care about and why I would warn you against anything about buying at the peak of the market is because when it goes pop, the value of your asset has fallen. Now, sure, you might think that not a problem at all. The value of my asset has fallen. I'll just keep paying it off. Well, what normally happens during a depression or some form of recession? Well, jobs get cut. People end up on food lines. Think about 2008 and how many businesses shut down. You might not be, working in a factory that is going to survive doomsday, etc. You might just be someone who's working in an office for a small business, earning your $80,000 a year. You've gone out and bought a house. You've put down 400 to 600,000 or 800 or more onto the house. You've got a mortgage of that size. So you put down your 10% or whatever. You've got a mortgage of that size, I should say, and you've lose your job. Okay, and everyone else that you had in your house were renting apartments, renting rooms from you in your apartment or house. They also lost their job. Well, how are you going to service your mortgage? And that is what is important. Okay, it's not so much that the valuation of my property has gone down. It means that you can't sell your house and cover your mortgage. That's what it also means. But it also means that you're unable to service your loan. Okay, then if you can't pay your loan, the bank comes in, repossesses it. You file for bankruptcy, and you're at the worst possible state in the next market cycle after everything crashes because you bought at the wrong time. That's as simple as that. So if we go 2008 to 2012, depending on which cycle we're counting from here, 2012 is the bottom of the real estate cycle. 2009, I should say, would be the bottom of the stock market cycle. Cyclically speaking, we would be going around 2011 as a starting point, and that takes us out to 2025, 2026 timeframe, low to low. Okay, low to high. Low to low, cyclically speaking, from an Aquarius point of view. So Aquarius to Aquarius is what we would be counting. However, low to high would be the stock market reaction, because the stock market will only fall for 12, 18 months, and it will sync up again and move back into phase. Property market can fall for roughly 4 years. I'm going to get out of this now. Okay, we're going to revert back to this because there is a possible chance now that this cycle is starting to invert. So what I do is I usually send out to our yearly forecasting group the cyclical bias for the month ahead. Now this goes out to March, and what we were looking for was a possible low. So the markets, the Bitcoin, cryptocurrency market, etc., was to come to a low around mid of January, and then they were to rise from there. This was for basically January to February. What we can see here, though, is that the market hasn't actually risen. Instead, it topped out, so it was coming up, topped out around this time frame, and has been falling since. So what is happening? Well, there is only one possible reason for this, and that is a market inversion or a cycle inversion. And that basically means that we need to flip everything that we're looking at right now. We need to flip it on its head, and we need to see if we can sync up this cycle again to see if we're able to actually align it with the curves that we were producing. So our curve is never wrong. If we have the right cycle, this is what a lot of cyclical analysts don't understand. If we got the right cycle, it's hardly ever wrong. All that happens is that it is inverted or it needs to be offset. That is it. Okay, if anyone tells you anything else, they haven't been doing this long enough or they don't fully understand cycle analysis. All we're going to do now, I'm going to have to blow this out because I'm going to be opening up the cycles that we're going to be looking at, is I'm going to flip these over. So we're going to start with the green one and flip it. Flip all this. Okay, then we're going to go to the black one and we're going to flip it. We're going to flip this. Then we're going to go to the red one and I'm going to flip it. This is it, flipped. I'm going to move this up here. So if we were to follow the red one, now the red one is a lunar cycle for Bitcoin. We can see that it was suggesting a low at the start of January. The third week of January, it was coming into its first top, second top around the start of Feb, and then it was falling since. All the other cycles also come in. They top out around 10th to 12th of January. We can see that this is an inversion in price where these were topping out if we invert the cycle. They were topping out down the bottom, and these were topping out at the top. So this is kind of, if we were to invert it and the inverted cycle was accurate, this would simply be an inversion in price to the cycle. Okay, that's the easiest way to look at it, and probably the most accurate way of explanation. And then after that peak came in, we were looking for prices to fall lower. That is it. So right now we have basically prices topped out here and they're falling lower. Does this mean that prices are going to fall lower forever? No, it doesn't. It just means that right now prices are inverted and we should consider the inverted cycle for as long as prices invert. The forecast that I produce here is for the whole year ahead. It's not just a weekly forecast or a monthly forecast, etc. We break it down into the weeks and months so we can get an understanding of price action. However, there is a possibility that this inverts for the whole year. There is that real possibility. And, you know, everyone has their own opinion on what's happening in the markets. I could be wrong. However, I want to throw this out there, and I want to be tracking this in 2025 for a real possibility, at least until after mid-year. So I normally don't consider inversions at all until March, because I want to know how the first 3 months have occurred. However, this is eerily close to that red line, that there is a possibility of an early inversion taking place in this year. And I wanted to put that out there as a possible cause, okay, because it's all about cause and effect. I want to put that as a possible cause that we are possibly inverting, and thus we should be looking for downward pressure on the markets, at least for now. So the red one bottoms out around the 20th of February before bouncing higher. The other ones keep progressing lower. Something to be watching for and some food for thought, and I'll leave that for you to interpret yourself. That's all I have.